So a lot of people have been asking me, when is the right time to invest into SPY ETF, and when is the right time to invest into the market as a whole? Is the economy already recovered? Are we past the recession? So these are all valid questions, and essentially the way to answer them at the moment is just look at the SPY ETF. Before the crash, it was worth around $340. After the crash, it was worth 220. So that's about a 60% drop. And just in the near future here, we've seen that it's risen all the way to the 280, 290 level. And what I've been telling people for the longest time is that if the SPY does reach 290, I feel that we're way out of recession levels here. Like, even with what it's increased so far, I feel that the market is having too much positive price action. And the fact of the matter is that bears, so people who buy puts in the market, have only won 4 out of the last 52 weeks. So if you've been betting on puts in any of the other weeks than those four, you basically have lost money. So what that means is that the market has been going up at an incredible rate, and this is a classic situation of a V bounce, or what they would call a dead cat bounce, which just means that the market is rebounding very, very hard. However, with every rebound, you can tell that stuff always has to go up, and whatever goes up has to come back down. However, the SPY just isn't following this rule. Every time that it tries to level off, Jay Powell and the Federal Reserve decides to bring out more positive news for the economy. So as you can see here, when it was first recovering, we announced the stimulus bill and announced that we are going to start printing insane amount of bills. And essentially what this did was it caused a huge spike, and then we saw a leveling off as people got used to this price. Then another huge spike when it was announced that there was going to be near zero interest rates, and then we see another leveling off here. However, a lot of people have been very bullish in this last week, especially today on Monday, because there's news that on Wednesday, when the Federal Reserve meets, they are going to decide to do negative interest rates or 0% interest rates. And what this means is that you basically are getting the money for free, or at least the banks are. When they loan it out to you, they can offer you a much lower rate, and oftentimes they're forced to only allow making a certain amount of profit, which obviously hurts the banks a little bit, but in the end of the day, they're paying $0 to receive this money that they're later going to loan out to you and make a profit on. So no bank can really be upset about that, and it's positive news for the economy. It's the ultimate trump card, and they're saving this in their back pocket in case the economy does start to tank. Because once people see 0% interest rates, it stimulates new business growth. A lot of people who might be waiting to open a restaurant or open a shop or something new say, okay, well, I have a little bit of money saved up and there's 0% interest rate right now. Why don't I go in and try to start the business while the economy recovers? And this ultimately will speed up the recovery of the economy. So, as you can see here from these news articles, the last piece of interest rate news came around March 16th, March 15th, and this was that the rates were cut to zero or near zero. And this was actually launching massive amounts of positive price action on the stock market. And as you can see here, the stock market just completely spiked. And that's what we're seeing right now in the run up to Wednesday. A lot of people are very much believers that this is going to happen and there's going to be a lot of positive price action. However, if after this move we see the market continue to level off, then we might be able to expect a second drop, because this just shows that nothing that the Federal Reserve is doing has been able to move the market up substantially at this point. Every time they do something, there's a sharp pullback in the time after they announce it. And as you can see here, the same thing. So a lot of people are worried that the market isn't going to be able to continue its upward momentum, and that what we're seeing here is simply as a result of people receiving their stimulus checks and putting them right into the stock market, and this is creating kind of a bubble for stocks. As you can see here, I actually bought a SPY contract today and I earned over $40. And for what? Like, there was no good news today. There's no reason for the stocks to run up. And a lot of stocks like Apple or Boeing really didn't move at all. Like, the stock market or the SPY just seems to be moving on its own, with no other stocks following this type of incredible price action, apart from online stocks such as Wayfair or Shopify, which have been growing incredibly. But other than that, it seems like the SPY is just literally moving on its own. So this doesn't really bode well for people who are bullish in this market and who want to keep seeing these earnings over and over and over, because there's no way that the stock market has recovered enough for it to be at the $290 level. There's most states have not even started any type of program to reopen, and the ones who have just started opening like tattoo parlors, like essential stores, Walgreens, CVS's, and a lot of other stores like that that were closed. So this isn't really a big reason for the economy to be moving it like this or rebounding like this. And I feel that there really might be a second pullback. So if I had to tell you some advice to do right now, I'd say wait till after Wednesday, see what the news is with this interest rate, and see if it drops or rises as a result. And then after that, make your move. If it keeps on rising after this news, then I would say that we're basically recovered and we are completely free of a recession fear. And you should definitely buy into the SPY and make sure you're holding on tight as we reach the $300 price range. But if it doesn't and it levels off the news again, like how it's been doing in these last few weeks, then I would say buy some puts and just hope for the best, because this economy is unstable right now. And a lot of the stuff that's happening is as a result of a lot of bulls putting in their money like crazy and not thinking about what could really happen in this market. And we're going to see a lot of repercussions from the money printing and from this inflation rate that we certainly can't see right now, but in the future will be largely affecting what we do. So yeah, be very careful in this market here in the weeks to come, as a lot of stuff is happening that many people don't know about, and a lot of novice investors are coming into the market, and it's moving the market in weird ways that don't really reflect how much the market has recovered or how much it really is worth. So yeah, good luck, y'all.